Is anybody else surprised at the underperformance out of Ethereum? I can't get enough of it. I mean, I own Bitcoin, not Ethereum, but that's for other reasons because I feel like I have too much Ethereum exposure as it is, which is why I own Bitcoin. And it turns out that's the one that's working. Didn't see that coming, Straza.
Hell yeah.
Hey guys, JC Peretz here, founder of AllStarCharts.com, and welcome back to Pardon the Price Action. I am joined by my man, Steve Straza. Steve, let's get right into it. The banks kick off yet another earnings season Friday with JP Morgan, Citi, Wells Fargo, all reporting. What are you seeing from this group of stocks ahead of the Q1 earnings?
I mean, listen, the big banks have held up better than the regional banks and the smaller banks. You know, the smaller they get, the worse they're performing. So the majors are doing the best right now, but it's not good, right? It's not good. When you look at these charts, whether it's JP Morgan or Citi or Wells, they are holding their prior year highs or the prior year lows. So the 2022 lows are still intact for the most part. The problem is, I think that these earnings events on Friday could be the catalyst that finally forces these breakdowns. So if we look at the charts, what really stands out to me is this JP Morgan chart on a relative basis, right? This is the best bank in the world. This is the best it's going to get, right?
Is it the best bank in the world?
It's the best bank in the world. A lot of people would argue that, but it's also the strongest. So that's why I'm calling it the best, right? From a relative strength perspective, this is as good as it gets for the banks. But if you flip to the absolute price chart, go to the close-up. It's really pressing on new lows. I would call that like a bear flag at the pivot lows. If that breaks, maybe this earnings report is what does it. I think XLF below 3050 is probably happening, and that's a problem.
Yeah, I mean, listen, if the XLF starts breaking below those 2007 highs at 30, I would agree that would be a problem. When you look at the regional banks, look at PNC, for example, it looks terrible. So for me, I look at these things and are the bigger ones going to, catch down? Is JP Morgan the strongest bank in the world? The fact that it's outperforming, it's being seen as a perhaps flight to safety within the space, I'll buy that. I think that makes a lot of sense. So whether it's earnings this Friday or not, that might be the excuse they give. In my experience, I see stocks running into those numbers. A lot of that already gets priced in. So I'm less concerned about the event itself and more about the overall direction of these stocks. Financials, it's a big deal.
Also, from a macro perspective, there will be a huge focus on the banks, obviously, this quarter due to what happened with all these regional bank blowups in March. Markets are bracing for March CPI and PPI data in the coming days. What are the charts suggesting about inflation expectations right now?
I mean, listen, if you want to go and see what the market thinks about inflation, I'd rather look at the bond market than, look at what the Federal Reserve is saying or not saying, or how fat the suitcase is, or whatever it is that, whatever silly tricks that they've used in the past. Like, I'd rather just look at the bond market. US 10-year yield down near the lower ends of this range. Do we break down? Certainly when you look at inflation protected treasuries, really underperforming nominal yielding treasuries, the bond market not pricing in those higher inflation. You look at commodities in general, particularly led by energy, something like the CRB index, a third is energy, really underperforming as well. So when you look at commodities, you look at the bond market, like what is that suggesting for inflation? Is it just suggesting that inflation's super hot and is heading higher? Not from where I'm sitting. That could change, right? We could start to see different data moving forward, but as of right now, we're certainly not seeing that at all.
You're saying watch the bond market for inflation. Couldn't agree more. That's the best place to look. Obviously, there's a very tight relationship between yields and inflation expectations because interest rates are the tool that the central banks around the world use to control inflation. I would say we can also get some great information from the commodities market. I want to look at this chart of crude oil and inflation expectations, or break evens, which is effectively that. They look exactly the same. And again, we talk about it on here all the time. You have 2018 highs coming into play right here. If these pivot lows break in either of these charts, that also means you're below the 2018 highs. I think that would represent structural damage to both of these trends. And we want to be a little bit more cautious about inflation expectations in the future. I think they're heading lower.
Bitcoin just broke out above 30,000, Mr. Straza. It's the first time since June of 2022. Are you buying down here or up here?
Just look at this chart. This is a classic trend reversal. It's as nice as a basing or a bottoming pattern comes. In the business, we call these inverse head and shoulders. That's fine with me. You got a really nice breakout above the breakout level, which came in around 25.5. Then we started coiling in a really high and tight bull flag or bull pennant, resolving higher from there now. 30 is also a key level. 30 is also a very key level. So I want to see if we can make a decisive move through it. We're at 30 now today for the first time in a very long time. If we're still at 30 this weekend, I think that's big time information, because we could look at this level and say, this is a very logical, level for some overhead supply to come in. If it can't, and sellers don't come in and send prices lower here, and Bitcoin's still above 30 going into next week, I think that's big time bullish information for the whole crypto space.
Mr. Straza, I believe this particular pattern, if my memory serves me, is an ascending triangle. Oh, about that there. How about that? It's old school chart pattern stuff. Don't worry about what it's called. The bottom line is what Straza suggested. You're looking at a bearish to bullish reversal. These things take time. It's a bottoming process, right? And that's what this process tends to look like. And, when zooming out, we're above the 2017 highs. And as soon as, last year and earlier this year, the market was able to prove that it can hold above those prior cycles highs. That was good enough for me, and I was buying Bitcoin. Listen, Ethereum was doing the exact same thing, but between the NFTs I own and some hedge funds that I'm an investor in where they're denominated in ETH, I felt as though I had too much ETH exposure, or not too much ETH exposure, but I had enough already. So I went with Bitcoin as my decision to which one I buy. But for other reasons, I went into the Endeavor Straza thinking that was a mistake and I should have just bought more ETH. And I was okay with that, kind of more of a diversification sort of decision in my part. And as it turns out, Bitcoin has been the outperformer. How about that?
Yep.
I didn't expect that.
Large speculators have their biggest net short position in the S&P 500 since 2011. Does this mean anything to you?
Generally speaking, I don't look at the equity futures market as closely as I would like agriculture or metals or energy. For stocks specifically, there's just other ways to invest in stocks, like buying the stocks or in the options market, and these are massive markets. So I feel like in futures you're not getting all the information, right? Like you would in more traditional, just pure futures markets like in agriculture, for example. However, when we're at extremes, despite all of that, it's hard for me to ignore it. Am I just going to, blindly buy everything and, this is the only thing that we look at? No, of course not. But I'm not going to ignore it. It is ridiculously extreme. We haven't seen anything like this in over a decade. The amount of bears, essentially, is what this is suggesting. Hard to ignore it, Straza.
Listen, so for all the reasons that you just noted, we don't include S&P 500 futures in our commitment of traders heat map every week, right? But when I look at this chart, I think it's very compelling. Maybe we should. All I would say, you say, it doesn't tell you the whole picture. Well, the way that we can, find the whole picture or look for confirmation that this is a buy signal or some sort of bullish signal, is just look at the price action, right? And I think where we are right now in the S&P, we have this confluence of interest right here at this 4140 zone. So if we're above there, I'm a buyer, and I love that chart.
Yeah, breakout above 4,200 or so. Yeah, for sure. All right. Straza, last week, we discussed the new highs and leadership from Europe. Today, Latin American equities are on pace for their biggest gain since October. Are you a buyer?
So I told you on the phone this morning, when I was looking at our momentum report, which we do every weekend, and we have an international equities universe of about 50 different diversified and country ETFs. I said, boy, that's a whole lot of green, So I had to dive in and look. It's still mostly Europe, but boy, Brazil is moving today. Latin America is moving today. If these are not tops, the rest of the world is turning it on. These could be some failed tops. You could see some sweet moves higher. I would watch Latin America right now because these tops would not break down. That means maybe they weren't tops.
I'm on the phone with you and you're like, man, there's a lot of new highs. I'm like, oh yeah, which countries are making new highs? And you're like, oh, I just took a quick peek, but there was a lot of green. And I think that in and of itself tells the story. Like, yes, I'm interested in which ones are making new highs. I looked and saw which ones are making new highs. I'm looking and seeing the ones catching up, like particularly in Latin America. Look at Brazil down towards the lower end of the range. If Brazil's ever going to catch a bid, this would be a logical place for it to do so. Same thing with Latin America. You've got Mexico already breaking out to new highs, Argentina breaking out to new highs. if Latin America is catching up, what does that say about base metals? What does that say about energy? What does that say about commodities? When you look at inflation expectations, when you look at crude oil down near key support, down near key levels, is it the same trade? Are they going to move together?
Yeah.
Yeah, I think so too.
So this is a little game that we like to play called word association. I'm going to say a word or a phrase. You're going to tell me the first thing that comes to mind. Wall of worry.
My word is classic.
Yeah.
How many times have we seen this wall of worry and like the funny little memes and everything, in when stocks are going up? Like that's just another way of saying stocks are going up. It's a wall of worry. That's people saying, man, stocks keep going up despite all the bad news. That's what wall of worry means, right? Yep. And people only use those words when stocks are going up despite a bunch of bad news. Like, in bull markets, just full of bad news, right? Always. And people think that means the stocks need to go down, but they keep climbing a wall of worry. So my word is classic. Seen it before.
My word would be sentiment, right? When stocks or any type of risk asset are climbing a wall of worry, it means that they're going higher in the face of negative headlines or when the rest of the world doesn't think they should be going higher. And that's usually a great time to be an owner of those risk assets. It's happening in the stock market right now. The IMF came out today and said global growth next year, over the next 5 years, actually is going to be at its lowest level since 1990. So 30-year record in the lowest global growth rate. Stocks are still moving higher. They don't care. It's been going on all year. And even towards the end of last year, I would also say we just talked about Bitcoin. Bitcoin's an even better example. We're up 100% just about now from last fall's lows. Do you remember where that rally began? That was FTX. That began in the wake of FTX. Keeps climbing a wall of worry. Stocks are doing it. Cryptos are doing it. It's not a bad thing.
All right, 2-minute drill. Agricultural commodities have been a mixed bag with grain struggling while softs are red hot. What are you seeing from these charts right now?
So precious metals have been working. The rest of the commodity space is rather bifurcated. I know you love that word. Sugar has been a real killer. Ian's been all over these trends. I don't like the grains very much at all, but sugar and cocoa, these are some massive bases. And I really like these charts. I think cocoa probably follows sugar and OJ higher. And this is just a good place to be right now. So if you want to be in agriculture, right, because our agricultural indexes do look good, I think you want to favor the softs and really stay away from the grains because they look very different right now.
Listen, for me, I just want to reiterate that finding areas of the market that are less correlated to the gyrations, I know you like that word, of the stock market complex and finding different strategies like our options income strategy it doesn't matter whether the S&P is going up, down, sideways. It doesn't matter at all. It's just collecting income. That's what that strategy does. So it's not correlated at all with other parts of my portfolio that are also correlated with the real estate that I own, right? So this is completely uncorrelated. When it comes to some of these agricultural commodities and different ETFs and even some of the stocks, the correlation with the overall market is closer to zero. And we like having different types of investments and different trades and strategies that are not all moving together. That's real diversification. And agriculture and commodities in general. We talk a lot about Bitcoin. We talk about gold. They're kind of in their own worlds. And when they're in favor, it could be really advantageous to have a piece of the portfolio there. So I want that was, as somebody who's not an expert at cocoa futures, I've traded them. It's fine. I look at the charts. I get it. I wouldn't consider myself an expert. The value add, in my opinion, is the lower correlation.
Yeah. And so looking in the softs, right? One of the weakest ones, interestingly enough, cotton. If you look at the COT heat map, commercial hedgers love cotton right now. So maybe this one plays a little catch up with its peers. Keeping a close eye on cotton here. I think maybe it hooks higher.
Sounds like a bold strategy, cotton.
Bold strategy, cotton. Let's see if it pays off for them.
All right. You ready? I'll kick it off. So talking a lot about Bitcoin today because everybody's talking about Bitcoin over 30K. I got one for you. What's a great vehicle for Bitcoin right now? Call me crazy. MicroStrategy. Do you want to buy Bitcoin at a discount? That's a way to do it. Why? Let me tell you, MicroStrategy has a $3.8 billion market cap. If you take the 140,000 Bitcoins that they now own at a value of 30,000, that gives you about 4.2 billion. If you want to call that net Bitcoin per share, we back out current liabilities, still have about 4 billion in net Bitcoin. So you could buy Bitcoin at a discount because that's all that's on MicroStrategy's balance sheet. I think it's a good way to do it. The market seems to agree with these new highs.
Net Bitcoin per share. Is that in the CFA curriculum there? Net Bitcoin per share?
I created the calculation. It's done on the back of a napkin and it works great.
Net Bitcoin per share. That's hilarious. All right. My hot take is chicken and waffles is underrated. Had chicken and waffles this morning with my daughter. You know, with my wife had to go to the doctor, so we're killing time before gymnastics class. I took her to this diner that I've been dying to go to. They had chicken and waffles. My daughter's like, chicken for breakfast? She's 2 years old, so she understands chicken's not for breakfast. But she's like, but waffles, okay. And then we put chicken on it, and I'm like, yup. And she's like, all right. So we ordered the chicken. Man, did she love the chicken and waffles. Smart girl. Underrated. And, you know, I really like personally like a Nashville spicy fried chicken to go with the waffles to get the sweet and the hot, right? But I was giving it to my 2-year-old daughter, so I was glad that this particular restaurant didn't make it that way and just had a traditional fried chicken. But I do like it on the spicy side with a glass of champagne. Has to move.
That's it. Fried chicken and champagne. That's the pairing.
That's a classic pairing for champagne is fried chicken. You know that. You like that.
I only know that from you because you wouldn't think that, right?
Yeah, I mean, you know, I study pairings I think about it, I study it, I have to know it for tests and stuff like that, or I did when I used to take wine exams. But yeah, that's one of the greatest pairings ever is fried chicken and champagne. And if you can mix in some waffles, maybe a side of bacon or something like that, woo!
You know what I like to pair with champagne? Anything.
It's true. You know, it's a good point because, you know, some people that are interested in wine that, you know, oh, if you don't know what to pair with it, the answer is champagne, right? It goes with everything. It's also great with Chinese food, champagne.
Yeah, it's also just delicious. So great pointers.
All right. All right, guys. Listen, thanks for watching. Make sure to give us a like and hit the subscribe button so that you never miss an update. And follow me at All Star Charts on Twitter. Be sure to follow Steve at S Straza. Leave a comment below and let us know what you think. See you next week.